breaker block execution on USD CAD. So you can see here, we reacted into the SIBI. We can ignore this. This was a different trade, one that we took today. This is our target, but this is the execution. This is the execution that we took the other day based off of the breaker block. So I'm just going to show a speed run real quick because the audio got messed up on the other clip, but I can do a quick breakdown as to why I took a trade. So here's the speed run. You can see right here, we're in a premium and discount. Just marking up some things. Here we have the balance price range. We're marking up the SIBI. That's what we're going to target. Here's the breaker block. That's where we took our entry from, the fair value gap that aligned inside the breaker. We drew the standard deviation from the manipulation leg, and we're targeting 50% of that SIBI. So if you see here on the daily, price had reacted inside a BISI fair value gap, and we were inside here looking for a possible buy into this consequent encroachment of this fair value gap and this wick. From here to here, here's a fair value gap. From here to here, 50% of that is up here. So 50% from here to here is this one. 50% from this wick to wick is this bottom one. And we just drug it out into the future like a huge fair value gap. If we go down to the 1 hour time frame, we can see we had a small reclaimed fair value gap right here. Tapped into it once, came back, came down. This is also redelivered. I'm sorry, not redelivered. It's a balanced price range. You see price came up, came down. Right here, came up, came down, and same thing right here, came up, and came back down and moved away. So this already to me is a balanced price range. You can see we came into it right here, came below, and the bodies of the candles are still respecting. They're respecting the balanced price range. So here's the 5-minute time frame. Again, here's the manipulation leg. We measured that standard deviation. We got a standard deviation of -4, -3.5. Now, why did we expect it to come up to here? Because we have a SIBI up here. Here's a SIBI on the higher time frame. Price came down, came up, came into here, and this is where we got our entry at. You'll see in the speed run, I'll show where we got our entry, and you'll see that it's right here. Now, it shows that we entered a little bit higher because of spread, but we got our entry here. And you can see price respected that, went higher, came down, hit the breaker again, came back up, and came back down one more time. Now, this is permissible only because we are trading in January. January and December are months that price can just keep going back and forth, and then go in your direction, which is why price action isn't usually that clean, so you have to be cautious. You can see price came down into the breaker, came back up, came back down, and then went higher, coming up to the -4 standard deviation. So here's the breaker right here, the fair value gap, barely tapped into it right there. You can see lightly tapped into it and started off heading higher.